Oil slides, copper gets hammered, and the shine comes off of gold. Commodities markets take a turn for the worse. I'm Jamie McGeever, and this is today's Market Pulse. But just how bad are things in the commodities markets? Well, here to tell us is Reuters commodities correspondent Erik Onstad. Erik, copper is on the way down again now. It's down almost 5% on the week. Worries over China and the Fed minutes, etc. The traders you talked to, though, how concerned are they that this is a big move down now?
Well, they definitely see more downside for copper. I mean, you have, besides the macro elements that are affecting all markets, the Fed minutes, possible lack of liquidity, you have China, which is the elephant in the room. I mean, China accounts for 40% of copper demand. And so far this year, there's been not much real physical demand. People thought after the Chinese holiday for Lunar New Year, people would come in. There might be a surge of buying that did not materialize. Exactly.
Okay, so if the guys you talked to, they're saying it's going down further, what are the big levels we should be looking at on the downside?
Well, it's already gone through some key levels. 8,000 was the 100-day moving average, plus a psychological level. 79.20 was a low from January. So that will spur more selling. We have just below the market 78.27, which is a Fibonacci retracement, and 78.31 is a 200-day moving average. Down from there, you have a December low at 77.35. Okay.
Now, I mentioned gold as well. Gold doing not too badly today, but yesterday got absolutely hammered. It's below 1,600. What was this talk about a commodities fund being in trouble? I mean, can you tell us more on that?
There were these rumors circulating, and that does happen every so often when there are big moves. We did look into, there were a couple names floated. I called a couple of them myself. I had colleagues who were also ringing. None of those panned out. They told us off the record, no, they weren't in trouble. But there is skepticism that that's the reason. I mean, there seems to be more a broad-based liquidation by funds. And in particular in gold, for instance, the largest ETF that holds gold reported its biggest outflow in 18 months yesterday. So there is a kind of a widespread disenchantment with gold. It seemed to have lost its safe haven qualities. And there also seems to be more downside for gold.
And finally, on oil, I mean, this seems to be obviously a broad commodity story. Is the downside in oil any greater than, say, for gold or copper?
Well, oil will move along with markets in terms of risk on, risk off. So that will hit it. But in particular in oil, you have concerns about supply. Saudi Arabia, earlier this week, apparently there may be more supply coming from Saudi Arabia. And then there's also concern about, at higher levels, demand destruction. So oil, along with the rest of the commodities, probably a little more downside as well.
Okay, Erik, thank you very much. That was Erik Onstad. In other markets today, Spain sold more debt than it expected at its third auction of the week. Madrid has now covered almost a quarter of its medium and long-term funding needs for the year. But there's a more nuanced picture for France, with yields edging higher at an auction today. Paris still seeing solid demand, with the sale more than 3 times oversubscribed. But there are mounting question marks over France's economic outlook. PMI numbers out earlier today showing a surprise fall. That leaves the gap between German and French PMIs at their widest since the surveys began back in 1998. And also keep an eye on sterling today. Some relief for the battered currency after better than expected public finance figures from the UK. And weak Eurozone PMI numbers we just mentioned there also helping against the euro. But Reuters analysts say it's still hard to call a bottom in cable. Today it fell as low as 151.34. That's the lowest in almost 3 years. Could the next stop be the 2010 low around 142? And if that goes, we could be looking at the post-crisis low around 135. Of course, that's a long way to go until we get there. That's it from us for today, but join Reuters every day at this time for a look at what's moving in markets and why. I'm Jamie McGeever. This is Reuters.